What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates for Bitcoin, and then I'll also touch on the total market value for all of the cryptocurrency space. This will just be a strictly Bitcoin video, but anyways, to go ahead and get it started. First thing that I want to do is, I've been doing this every so often here on the channel concerning my phase cycle theory or Epoch theory for Bitcoin. I use those interchangeably in my personal life and on the channel. But first thing is, if we look here, going all the way back to July 2010, you can notice this peak right here, November 10th, or November 6th of 2010. See the second peak right here, February 10th of 2011. We see a third peak, and then right here, June 8th, 9th of 2011, we see the fourth and final peak, which wraps all the way back around to this one right here. This would have been the first peak and the yellow peak, according to the theory, are going to be synonymous because it's the end of a cycle, which the end of a cycle is then also the beginning of a new cycle. But we look, so going back to this first yellow dot and then taking all the way out to this blue dot right here, this is phase one. And then from this blue dot to the third peak to this last yellow dot, the fourth and final peak of the cycle, also the first peak of the next cycle, which would be cycle 2. What we're looking at now is cycle 1. This would be phase 2. So again, from the blue dot to the yellow dot, phase 2. Now, the very important thing to note about phase 1 is this right here. So essentially what we see is, stretching this out just to give it a better appearance and easily able to ascertain what I'm trying to point out. We see this just drop. We see a bottom. When we come up and we come down again, we see another bottom. So this is a W pattern, a double bottom, and it essentially, so as I'll show throughout Bitcoin's price history, the double bottom essentially looks like this. We see like more of a sharp bottom and then kind of like a rounded out bottom. Could consider that as some type of Adam and Eve pattern as well when it comes to analytical patterns of the market. So we see that that is the notable characteristic of the first half of phase 1. Once that happens, Bitcoin's still very young. It still has really no maturity to it, so it just trades sideways, doesn't really continue to go down outside of these two pretty wild wicks. We then see this run towards the upside here again, so we see the second peak, we then see this retracement, and then run up to the third peak, or the blue dot. So this right here would ultimately, this, what I'm highlighting, this is the bull market of phase 1, and the W, as I've said in the past, basically just acts as the precedent that sets the case for the bullish scenario that is this bull pattern, this bull market right here, which you can also classify this, if you want to see it this way, as an A, B, C, D pattern. With two peaks and then obviously the beginning point and then the one retracement that we get as well. That then leads up to, again, the blue dot, third peak, we then just see very simple, more drawn out retracement than this one back here. Just to look at the length of them. So this one right here was 33 bars, so 33 days, and this one right here was about roughly 55 to 60, so just approximately roughly double the length almost. So again, with this phase 2 that we see right here, from the third peak to the fourth peak, we just kind of see this downwards, kind of gradual bear market, not really any quick drops, just in a diagonal fashion with respect to the horizontal of the previous high right here, which then once price, you can see, broke it, sat here sideways a little bit, and then it finally continued just to break towards the upside. And then we then have this bull run right here, which is just a slow, gradual bull run, which is also a very strong one, as you can tell. This was a longer period bull run than these two moves back here, leading into the second and the third peak, and it's kind of just there's no major retracements outside of this here as well, which again makes sense due to the fact that Bitcoin is still very young at this point. So going to the weekly again, so what I just went over, you can still see here the dots. So yellow, red, blue, yellow again, end of the first cycle, beginning of the second cycle. So if we zoom out a little bit here, and I show this portion of price right here. This is cycle 2. Again, this right here would be where cycle 1 ended. So again, what I want to do is, so we start phase 1, just have a drop, first bottom, relief rally you could say, and then we come down, kind of just round it out a little bit, and then we continue to the bull market. Again, could look like an Adam and Eve type of double bottom, the sharp bottom, and then a rounded out bottom. Ultimately, just as I said, setting a W type pattern as we lead into at least that first peak, or the second peak, the red peak. And then again, so we factor in the second peak and this third peak right here. This is also, once more, you can see this A, B, C, D like pattern here. Also, just to take the fractal of this as well, you can see it's essentially the same thing, even though you're already looking at it down here, is what I showed for the phase 1 and cycle 1 and that fractal. So then we go to here at the third peak, blue dot. Again, we have just one over phase 1, the W into the ABCD pattern, or a lightning bolt type pattern as I've called it in the past. And here we see this bear market again, very similar to the cycle 1 phase 2 that I pointed out. This is just a steady, gradual, more long-term bull market with a diagonal slant with respect to this horizontal resistance, this all-time high. You can see once the major difference between this phase 2 of cycle 2 and the phase 2 of cycle 1 is the fact that this overall bear market's essentially the same. It just clearly took longer to play out, but the main addition would have been is this sideways ranging we did right here, which we set again a type 2 double bottom, as I mentioned in other videos, kind of going over how I personally see and understand the very important alterations of M's and W's in price action, whether it's within traditional fiat markets or cryptocurrency based markets. So this was really the main addition right here, other than the fact that I said this overall bear market was longer, but then goes sideways in a sideways range at the bear market low, bear market bottom, the accumulation range, and then we come up here, we just have this kind of longer term gradual bull run. Again, pretty clearly you can see the similarities here going back to this the first cycle, and then once again pretty clearly you can see the similarities in this right here as well. So if we go to our current cycle, so I've gone over cycle 1 and cycle 2 with phase 1 and phase 2. So what we see right here, this is cycle 3, and we are at this point basically around, I would just say approximately 85-90% done with the phase 1 of cycle 3. So again, we go back here. We look at the end of cycle 2, yellow dot being the beginning of cycle 3. Once again, we'll see essentially the same thing here. Again, each of these times, as I'm sure you've noticed, the bear markets are longer in duration. I haven't shown it, but the bear markets are also becoming less bearish as well. This just goes in line with the common idea that most people in this space already know about in terms of the lengthening of the cycles and the diminishment of returns, and then also the diminishment of losses over time. Some people, especially one of the guys that I keep up with that does technical analysis and just gives other information concerning cryptocurrency and other things, he seems to, and I'm sure there's other people that would agree with him, say that most of the models for Bitcoin have failed. And he also mentioned recently in one of the videos I was watching how even the lengthening of the cycles and the whole and that idea, as I mentioned, is also seemingly being uprooted as well, which I'm not sure exactly why he's saying that. I definitely don't think that's true. But anyways, so again, here we are starting off cycle 3, beginning of phase 1. We just come down, again, longer duration, we make our first bottom, come up, relief rally, and then we kind of had this rounded out area right here. With the exception of the March crash, which, let's say, had the March crash not happened, had the pandemic that was spreading around the globe in 2020 not happened, this major drop likely would have still kind of roughly respected this kind of curve right here, and we would have stayed more above this than we did. Although it really didn't break it that much. Mostly it was just some wicks and a minor candle close below that. But again, we can still see this kind of Adam and Eve double bottom type of pattern. And now before I go on, if I go to the monthly, you can actually see this even more clearly because you'll see this wick is more drastic. We have this first sharp double bottom, and then we can see this kind of rounded out pattern better than we did on the weekly chart. But going back to the weekly, so I showed we had the double bottom there, which again sets the precedent for the bull market of phase one of the cycle system. And this ultimately leads us into the ABCD patterns I mentioned right here. We had that first run. This time around, what changed is the fact that we set a double top with a bearish divergence, whereas in the other cycles that did not happen due to the fact that Bitcoin wasn't matured enough and wasn't decayed enough in order to really kind of have this sideways distribution phase that led into a double top that ultimately began the bull market or the bear market. Again, we then have our retracement once more, lengthier, which makes it seem like it went down more percentages or went down more percentage wise, which it did because clearly as I went back here, if I go back here, we can see that the drop right here was, well, actually from wick high to wick low, basically 75%. And if I do that here, well, let me get it right on it. If I do that here from 69,000 down, we can see 77.57 thousand. So it was a little bit more, still essentially the same. And like I was mentioning, the whole diminishment of losses as well. I wouldn't say that necessarily is something that invalidates it because comparing the major bear markets, so right here for the beginning of phase one and then right here for the beginning of phase two, those are what are the what I consider to be the genuine or major bear markets of my Epoch theory. And then clearly as time has progressed, this is the first time around where we're actually going to see the retracement that was just minor back here in the cycle two's retracement of the bull market. In cycle three, clearly you can see that this has transitioned into a full-on and a full-blown bear market that is taking a pretty long period of time to carry out. So again, we have this first bull run, first leg in the bull run, phase one, make this double top, bear market, but then building up very similar to how we did back here, as I've mentioned a lot on my channel in the last few months. But then we're building up right here, and now we're beginning, I believe, basically this portion of price right here. This is what I believe is happening right here. So far, zooming in, we can compare this first leg up. So we see one leg up right here, kind of stagnated for a little bit right here on the week of the 7th December 2020. Just basically went sideways for about a week. You can see the volume of the candle was clearly not as much as in the prior candles. But we have, so that was the first leg up. We have the second leg up. More of a retracement right here. Didn't go below about, I think, 37%. It was actually 31.24%, which is still respects the 20 to 40% rule of Bitcoin bear markets in its history, or Bitcoin bull markets in its history, rather. Going back in history and looking at all of Bitcoin's bull markets, it never, in a bull market, there's never a retracement more than 40%. It typically sits within the range of 20 to 40%. So again, so first leg up, second leg up, we had a more of a drastic retracement, and then we see this final leg up right here where we fizzle out and then see this drop that led into the double top. So essentially what we see right here is like an Elliott wave impulse move where we see 3 bullish phases and then 2 retracement areas. So what I believe we're seeing right now is, so again, we have the first leg right here. This right here was the first leg. You can see we had more of a noticeable retracement right here than we did back here again on December 7th. And if I go down to 4-day, you can see again right here, weren't any red candles on the 4-day. Let's go a little bit lower. Right here, again, on the 2-day, you can start to see that there was this kind of, they set these 2 local lows. We had some very just minor drawdowns, and then ultimately it started going back up. If I go back to the weekly, so right here, as I said, we're seeing the first leg of the 3 bullish legs of the bull market for phase one. So that'll be in the first leg. We see the second leg, and then now I believe we are beginning the second leg, which I think, according to the calculations I was doing earlier today, is going to take us to, and I could be wrong. This entire theory could be wrong, but according to the theory, it is going to, assuming we do not get a pullback over the next few weeks to the month or so. I mean, the halvings at this point, again, like I said, somewhere within a range of 50 to 60 days. Slated to happen mid to late April, or maybe even early March or May. So I think we're on the second leg here. As I was saying, I think it's going to take us up to approximately 100K, assuming we don't get any pullbacks. And I say approximately 100K with a upwards and a downwards deviation of around $10,000. So we could just push up to 90K, then have this more drastic retracement, which last time around, like I said, was basically approximately 32%. So I'm assuming it'll be roughly around that at this point. Or we could even, push up to as high as around approximately 110K. Maybe that's just some wicks that we see, and the candles really close more so around, 95K to 100K. But we're also printing, we look here on the weekly chart, you can see that we are on this current candle, still 3 days, 18 hours in it. We are printing a high volume vector candle. Last time we got one of those would have been right here, around 43,000, and then right here, the week of October 23rd, since we began this run up above 30K. So this could insinuate that this is the beginning of a move up to, like I said, approximately 100K. But this also could, which I'm not leaning to this situation, so also could note that we're setting a local top, and it could, like for example, maybe it's going to retrace a little bit down to this area, maybe bottom out and then come back up and do something like that. Or maybe Bitcoin still needs to go down even lower and hit this vector candle at around 32K. Again, also in line of finding support around here, back at 30,000. And then, quickly come up. If I had to guess, it would likely quickly come up more than go sideways at that range. I don't think it's going to go down that low at this point. I think if it does come down, I think approximately 43,000 will hold at this point. But right now, I'm currently leaning to seeing the price continue to go up here. This fractal pattern you've been seeing on here is with respect to the monthly. Currently, it's looking pretty good. As you can see, this candle right here so far is matching up with the current candle in terms it's actually it's wicked a little bit higher. So for example, let's say next month, March, we move up to this candle sitting at approximately 90,000. So again, does meet the range that I was mentioning earlier. But like I said, there's still, so in this monthly candle, there's 17 hours left, and it did go a little bit higher. So let's say we just wick, it still kind of starts to, as time goes on, these candles follow through accurately to this fractal one here. Let's say, if it wicks up a little bit higher than that, it would take us to around 95K, which again, approximately 100K, assuming we don't get any pullbacks. And assuming that the halving happens in April, again, this is going to be the halving line right here. And also assuming if Bitcoin does continue to go from here and doesn't see any pullbacks and hits approximately 100K, then this will be the first time in Bitcoin's history that we set a new all-time high before the halving. It could also happen in, maybe this is all month delayed and Bitcoin's pushing, approximately 100K in April. As long as it still does that before the halving, again, still the same scenario. We have a new all-time high set before the halving, which really I think the main reason for, if this does end up happening, the main reason for that, and it should be clearly evident, is the fact that the Bitcoin spot ETFs were approved in January of this year. And I have a friend that he's been trading since 2013, and I've been talking to him for the last few days, which brings me to this chart right here. Those of you familiar, We have this daily, which you see on here. We see this daily broadening, ascending structure, this wedge-like pattern. So this is the 4-hour and the daily, the two time frames I've been updating on the community tab. We see right here, we're just moving up in it. Let me break down a little bit, come back up, and then we broke back into the pattern. We zoom in here on the smaller time frame when I was the last like 10 to 15 days I've been saying as we're trading in this, we broke out of it. I was just pointing out how there could be some fractality here, and we break back up into the pattern just like we did going to this daily chart on the higher time frame. You see, again, we broke below it for a small period of time, then eventually broke back into it, and we saw the same thing again here on the 4-hour. And that friend that I was talking about, I was mentioning this to him because I was just personally thinking that Bitcoin looked strong at above 50K or just at 50K, and he had just recently sold like 80% of his the trades he's done recently because he had been up around 100% since August of last year. And he was like, "You, of course, you would message me that on the day that I sold." And then he messaged me earlier this morning, just just saying, "What is that? What is going on? This is absolutely crazy." I mean, I didn't even really expect this, in all honesty. I mean, this is almost a. I mean, especially if we go to this daily chart. Well, let's go a bit lower. Let's go to the 12-hour. I mean, look at this. I mean, it essentially like is going straight up. I mean, this impulse right here was clearly staggered a bit leading into this broadening pattern, but I mean, this is almost a straight up move. And then also, I mean, going to this daily, you can see that we basically, with this previous candle here, wicked up to the resistance of this smaller time frame broadening ascending wedge, the structure that I've been pointing out on the chart. So if we look at this weekly chart, we can notice this channel that I've had on here before. It's just from the wick low week of July 10th of 2017 to the approximately $20,000 high, December 11th, 2017, and then to the low right here we set in December 18, January 2019. This will be phase 1 of cycle 3 that I went over on the prior chart. Clearly see how important this is. The bull market all-time high projection, again, according to my phase cycle or epoch theory that I explained earlier, is approximately 180K to approximately 230K, which this Fibonacci channel respects and also is calling for, especially if you look back here, which again, this bull market is literally the same thing as this, according to my theory. This one that we're currently on is just going to take longer to play out because Bitcoin is always decaying. It's not just decaying from phase to phase or from cycle to cycle. I mean, for example, like go back to the way that I think about it, go back right here to the bottom, January 28th, 2019. The factor of decay that Bitcoin was experiencing at this point in time is less than it was experiencing at this point in time at the March crash. It's not just a change of decay in terms of the factor, phase to phase or cycle to cycle. It's literally every single second or minute or number of days as far as I'm concerned and the way that I personally think about it. So leading up into this, again, like I said, this channel also supports it. The phase cycle supports it. And then moving into the final Bitcoin chart, this chart that I went over recently right here with the Fibonacci retracements. Again, we have the phase 1 bear market, cycle 2. Phase 2 bear market, again, cycle 2 right here. Phase 1 bear market of the current cycle 3. You can see that the bull market right here, after the ABCD pattern of phase 1 of cycle 2, goes up to the 2.321 of this broad green range. And then fast forward, we have phase 2 cycle 1, or cycle 2 rather, again, tops out within this green range. So currently cycle 3, phase 1, we see our double bottom. We see the first impulse of the ABCD or bull market of phase 1, head up to the 1.618. If we go back to the prior one, see the exact same thing, other than the fact that it did make a double top. And the retracement, as I mentioned earlier, was nowhere near as long. And then had our recent bear market. Now we're coming back up to the 1.618. And then we can see a green range once again. As I said back here, 2.321 is what was met, and the 2.321 falls at approximately 227,000, which is why, again, I said around approximately 180K to approximately 230K is, I think, the range that Bitcoin is heading to in this current bull market. So outside of that, just again, so that was this right here, clearly historical. It's hit every single time. Again, we have the Fibonacci channel right here. And then lastly, we see this indicator down here. It is a stochastic momentum index. You can clearly see how it's just in a stochastic-like presentation, but it's also paired with the momentum. But anyways, you can clearly see right here, I'll put some horizontal lines. You see this dip below right here. You can see literally perfect time to have started buying in this range right here for Bitcoin back in 2012. Fast forward to this next one right here. We can see again, perfect time. You would have been buying the first low right here and buying throughout this entire sideways range, accumulating Bitcoin at its cheapest for this entire period leading into the bull market. If we go to the third one right here, again, we see the same thing. As we're leading into dropping off to the bottom, go sideways for a bit, lead into the relief rally, fantastic opportunities to start buying. Then currently, again, we see the same thing. We're dropping off. We are hitting the first bottom of the type 2 double bottom that was set in the current or the previous prior bear market. Again, perfect time to start buying as we lead into the $15.4 thousand low. And then once we build up to the sideways range that Bitcoin was showing at 30K for many months last year. So we have this stochastic momentum index with the inputs that I've used, basically perfectly showing when to start buying Bitcoin at its lows. Now, before I go into the highs, these are indicators, or not the indicators, but the inputs I'm using. Percent K length is 8, percent D length is 4, and then overbought and oversold 40 and negative 40. And then this is the style that I'm using. If any of you are going to use this, if you'd want to use the exact same style that I'm using, I don't find any reason to use these 4 plots because they basically just are the same things that these pink line and this blue line is. And then also when it comes to looking it up, it would be this right here, stochastic momentum index in parentheses SMI. So if we look up here for the all-time highs, it did not do it back here for the bull market of phase 1 of cycle 2, but once we reached phase 2 of cycle 2, we can see again right here that get the vertical lines right here, as Bitcoin's reaching the high of approximately $1,000 January, February, March of 2017. This is when this starts to flip pink and showing that the bull market's really about to begin in terms of passing the previous all-time high and then heading to the actual all-time high, and then it goes back below and the pink range ends. We look here in the last bull market, again, we'll see the same thing. Right here, we have October, November of 2020 as Bitcoin's pushing 12, and then in the next candle, November, pushing 18, 19,000. So again, heading back up to the previous all-time high of approximately 20,000. Then the real bull market begins right here when Bitcoin went from approximately 9.5K to 64K in around 7-8 months. You can see here, I'll go ahead and zoom in. You can see here currently that we entered the pink range essentially at the beginning of December. It's going to be right here once we hit approximately 43K. And then directly after that is when we get the first white vector candle printed on this monthly index chart. And the current candle, 17 hours, 30 minutes left. It's also currently a high volume vector candle. Again, this is just another reason, especially because this is the monthly, that the bull market is definitely starting to ramp up. If we go back to what it's comparative to back here, you can see when this first one and second one was printed, you can see the bull market was clearly on at that point. And what's also interesting is that these two white candles encompass the move up last time around. And this is what's comparative to if we move up to approximately 100K. Like I was saying, let's just say leading into the halving and maybe like half a month or a month after the halving, Bitcoin's pushing up or already at that approximately 100K and making its retracement. I wouldn't be surprised if this time around we print. Right now I have two. I wouldn't be surprised if we print, three, so the next candle could be white high volume, or we could even print four, so the next two candles would be white high volume vector candles. But outside of that, lastly, I just wanted to quickly go over the total crypto market value again. We see the 618, these horizontal lines correspond to the 618 of these bear markets, broke above it clearly. When this happened last time, bull market was on. Then again, I'm expecting approximately 10 trillion to 16 trillion or the upcoming total value of all cryptocurrency assets that are factoring into the price of the chart that we currently see. We can see that this bearish divergence isn't really playing out anymore on the weekly, and that basically same thing goes for the weekly for Bitcoin as well. We can see that I was kind of mentioning in a community tab post, I was mentioning how right here you can see the price is in ascending support. We zoom in right here. It's still, as you can clearly see, it's still a negative support, but especially if Bitcoin continues to go higher, pushes back up to 64K and above that to 69K and even higher, then this RSI will most likely just continue to go up and chop in this upper range as the bull market really kicks off and begins. But that was all that I wanted to go over in this video. So again, as always, none of this is meant to be financial advice, really just meant to be educational content, to be informative. But all of that being said and everything gone over, I hope you all enjoyed and you have a blessed day.